Standard Bank Group has reported record headline earnings of 26.1 billion, that's up 10% period on period, and a higher return on equity of 19.8%. The group says the solid performance places them comfortably within the group's 2028 return on equity target range of 18 to 22%. Now, joining us for a broader conversation on the results is Group Chief Executive Officer Tshabalala. A very good afternoon to you, Sim. Thank you very much for joining us on the SABC.
Good afternoon, Mfundo, and to the guests. Thank you very, very much for this opportunity.
No, it's a pleasure to have you with us on the show. Now, it seems every time we speak, I have to start with a congratulatory message. So congratulations on the results. You've again delivered a solid performance for the 6 months ended June this year, reporting headline earnings of 26.1 billion. What do you attribute this growth to in this very volatile climate of managing inflationary and monetary policy, all, of course, these effects of, among others, the Iran-US war?
Oh, Mfundo, what a privilege it is to serve together with 50,000 people operating in 21 countries throughout the continent. The major subsidiary of which being the South African operations, SBSA, who produced results that were 14% up. So in fact, in the geographies, the hero performance was from the home base, South Africa. Of course, there are different business units in our group making big contributions. The leading one, of course, was the corporate and investment bank. Second was the insurance and asset management business. And then, of course, there was personal and private banking as well as business and commercial. In South Africa, I have to just call out the South African Retail Bank. They were stunning in their performance. They showed strong revenues, particularly in fees and commissions, and most importantly, in value-added services. In a sentence, all parts of the group did their bit, with South Africa playing a big part.
I will get to the granular details of those financials, specifically looking at your cost of income, etc. But when watching you address a bit earlier, you stated that your growth is supported or anchored by disciplined capital allocation, robust risk management, but also continued investment in people and technology. Now, in many of your addresses, the investment in people aspect seems to be quite present. What does investment in people look like within the Standard Bank Group?
So firstly, it involves all 50,000 of our employees. Secondly, it entails electronic means of distributing knowledge with a program which we call Degreed. Thirdly, the higher up you go in the hierarchy of the organization, the more investment is made in your professional and development, including, for example, in my own personal case, where I had the privilege of going to Harvard off the back of what Standard Bank was providing. The same applies to a large number of executives who then go through that level of training. So everybody in the organization gets to be trained. We've got a very extensive graduate program which recruits graduates from throughout the continent, and it's been on the go for a couple of decades now, with some senior executives having come through that program. We send people overseas on secondments to our partner banks globally. In particular, also with the Industrial and Commercial Bank of China. We give people the opportunity to learn artificial intelligence. Over 30,000 of our staff are using generative AI, funded and provided by us to make them more productive.
Sure, quite
and
impressive.
So a massive investment both in technology and in people to give people the capability to do their jobs better.
Most certainly impressive. Then to the broader key financial highlights. Let's start from your cost to income ratio all the way to your credit loss ratio. Just take us through these.
The cost to income ratio, Mfundo, is meant to measure the efficiency of the bank and has been declining over the last few years and continues to decline. And our target is to get it to below 50% by the end of this year. Firstly. And secondly, it is driven in large measure by a ratio called the Jaws ratio. In other words, the difference between the rate of growth of your revenues and the rate of growth of your costs. That has been a positive ratio in this company for over 10 reporting periods. It shows you the level of professional discipline by our teams to manage their costs. As you know, we can't manage the macros, but what we can manage is what happens inside the company, which is our costs. We've been able to do that notwithstanding the fact that we've continued to make investments. Secondly, of course, the major driver of how a bank performs is its net interest income, which is driven by lending. That was tepid in the reporting period, and it was tepid for a number of reasons, including, firstly, the fact that a number of the major currencies on the African continent declined in value relative to the rand. And so when you translate them into the rand, you translate those revenues into the Standard Bank income statement, they are less of value to us as a consequence. Secondly, you had declining interest rates, which are negative for a bank's performance.
Yeah.
Thirdly, however, we had great non-funded revenues. And as I indicated to you, our retail bank did particularly well in fees and commissions. The next thing to consider was the fact that we managed our risks very diligently. So our credit loss ratio improved over the period and is calculated to improve in the second half of the year. And as a result, we ended up with those headline earnings that were 10% up that you made reference to in your introduction.
So it speaks to that robust risk management that you speak of. Then to a more geographic perspective, if you will, you have indicated that South Africa was the star of the show, but how much did the Africa regions contribute to headline earnings?
So South Africa contributed 51% and Africa regions contributed 40%.
All right. And then South Africa's outlook broadly, you say you are increasingly confident that the strong economic performance of sub-Saharan Africa will not be seriously dented by the geopolitical tensions over the medium term. Can you perhaps expand on this position? What have the analysts considered to be the indicators that the region will emerge minimally scathed, if you will?
There are a number. Firstly, the level of financial management and the excellence thereof on the continent, both in terms of monetary policy and fiscal policy, firstly. Secondly, the discipline with which structural reforms have been effected throughout the continent. Thirdly, the improved national competitive advantage of the major economies on the African continent, of which South Africa is one. And perhaps let me say a word or two about South Africa. We think South Africa will grow at roughly 1.3% this year, and by 2030 we'll be growing at roughly 2.3%. That is 2.3% off a massive base of over $420 billion. That is massive, and it's a game changer for the African continent, the faster South Africa can grow. Operation Vulindlela, to the extent that it is accelerated, will accelerate growth. We've seen the impact of that strategy, national strategy, showing up in the balance sheet of Standard Bank in provision of financial services to distributed power, to Eskom, to Transnet, to the logistics sector, to cement companies, to the extent that you're building roads, bridges, ports.
Yes.
And this is calculated, in our view, to continue. And as I say, the faster it gets executed, these structural reforms, the faster South Africa grows.
Yeah, most certainly a number of people would agree that they have seen the progress in those structural reforms. But there was a condition or a rider under which this improvement can manifest. According to you, you place that condition. You say there must be an effort on the part of South Africa to support Africa's economic integration. Can you just expand on this?
One of the defining features of the African continent, if you go back thousands of years, is trade and trading. And yet in the last couple of centuries, that level of trade has diminished as a consequence of colonialism and so forth. And so the proposition is that to the extent that Africa can trade with itself, to the extent that it trades at the same level as other regions trades with themselves, it'll show up in better economic performance by the African continent. We think that South Africa stands to benefit from that because of its national competitive advantages, which includes a massive installed base, a sophisticated regulatory environment in many respects, and a base off which many companies can grow on the African continent from South Africa. But to be able to do that properly, South Africa has to be properly integrated into the region. In other words, the barriers to trade should reduce. The ease of movement of people, goods, and capital should be made easier. Now, there's a lot of work going into that, including the Africa Continental Free Trade Area. But the proposition is that the faster it can be done, the more benefit there will be for workers, jobs, corporates, and governments.
Now, Mr. Tshabalala, before I let you go, it would be remiss of me not to pose this question to you. It's Women's Month. We've spoken about the investment in people within the group, but talk to us about the investment in women, because we cannot shy away from the fact that even to this day, when it comes to domestic responsibilities, perhaps in households, they still disproportionately fall on women who are still equally ambitious. We are in the working space now and equally wanting to thrive and just move up the corporate ladder. But the support is needed specifically for women, given that there is that still disproportion when it comes to domestic burden. We want to rear our families, we want to have children, grow the family. So how does the group support women?
Yes, so firstly, a large proportion of the Standard Bank leadership are women. And to the extent that you've got a large proportion of women in your leadership, they speak up and they effect change. And we're very proud at Standard Bank that our chairman is the formidable Nonkululeko Nyembezi. And that trickles down throughout the organization. Secondly, you make it part of your strategy. Thirdly, you give people targets. Fourthly, you reward and penalize them on the meeting or failure to meet those targets. Fifthly, you make sure that people get trained and they get given big opportunities. Sixthly, you make sure that there are no impediments, whether conscious or unconscious. And lastly, you make sure that you are open to the societal dynamic, the societal interplay where people criticize you, you hear their criticism, you change and you improve. Oh. And this is a long-term thing. It's similar to the ideal of the life of struggle. You constantly find ways of improving yourself.
Indeed. Mr. Tshabalala, thank you very much for joining us this afternoon. That's Group Chief Executive of the Standard Bank Group, Tshabalala, speaking to us there.